Well, hello everybody, welcome back to another Forex market analysis session. My name is Alexander Nikitin. I am a professional trader and a programmer as well. If you guys are new, what we are doing here, we are looking at some good opportunities that may happen in the next weeks, and I'm explaining you the aspects of technical analysis and the psychological aspects of trading as well. So we have a kind of educational video here. Okay, let us start. The pair I'm going to analyze today is euro-dollar. As usual, my analysis consists of two parts. I first analyze the higher time frame and then I switch to my trading time frames. On my higher time frame, I am to identify what price is doing now and to predict what price is most likely to do next. And on my trading time frames, I am to decide how can I get involved and to execute the trade. Okay, my identification part says that on the high time frame we have a downtrend. What is a downtrend? The definition of a downtrend says that it is a series of lower lows followed by lower highs. If you pay attention to this low, yes, this low is lower, this low is lower, and this low is lower. It is a series of lower lows. If you pay attention to this high, yes, this high is lower, this high is lower, this high is lower. So it is a series of lower highs. Series of lower lows followed by lower highs is a downtrend. Okay, once we have a downtrend, this means that we will most likely move to the downside. Okay, if we are going to move to the downside, now I am to predict, I am to decide where this downside movement should start. And to do that, I will analyze the swings of the market, the waves, or impulses and corrections. Look at this. We have this movement, another movement, or the structure of the market. And the most recent impulse is this one. So we violated this level. It was a good support level, 1-2 times. As you guys know, broken support should turn into a resistance. So after those impulses, we usually have that correction. So now there is a question: when this correction will start? It may start from here, yes, from the most recent lows that we have, or price may go lower and the correction will start a bit lower. You never know what exactly scenario will play, so you need to look at the history of the chart to have some tips. It is the only source of information where the price might reverse. If price reversed on some level in the history, in the past, this means we'll have some good probabilities that it may reverse in future as well. Okay, look at this level. It acted as support, and if I go deeper into history, we can find some more evidence of this level acting as support and resistance. Let's go back. So now we are sitting at this support level. Price in the history bounced off that level, so we have good probabilities, more than 50%, that price will move to the upside if it goes a bit lower to that support level. So the prediction part says price will go here and then the downtrend will continue. So for now there is a space for counter trend opportunities. There is a space for counter trend opportunities. If you guys are counter trend traders, then it's a good opportunity for you. If you are trend following traders, then you should skip this movement and wait until price goes here and enter to the downside with the overall direction of a trend. Hope you understood that. Hope you remembered how you need to identify the support and resistance levels. Another way to identify those support resistance is to use my fractal indicator that I have written myself. It looks this way. You only need to change the time frame. My time frame is daily, and my time frame here is 1440 minutes, which is daily as well. Okay, run that and you will see those green and red rectangle. Every time price enters into the green rectangle, it's better to buy. Every time price enters red rectangle, it is better to sell. If the green rectangle is violated, it then acts as resistance. When support is violated, as you can see here in this case, it acts as resistance. And when the red rectangle is violated, it will act as support. So very handy to have this indicator. It helps a lot and it saves your time. You don't need to see the history of the chart, find some evidence that the level you're looking at is very strong or it is reliable. The indicator will draw rectangles showing you the most reliable levels for now. Okay, so we are approaching some support level. Let's switch to the trading time frame to find some reasons for entry. I will zoom it in if you don't mind. Okay, and what I'm looking here is this formation. My reasons for entry are advanced pattern formations. I trade Gartley advanced formation, Cipher advanced formation, Bat advanced formation, and the Butterfly advanced formation. And here we have a Gartley advanced formation. I will explain you the rules. The Gartley advanced formation starts from the movement, and this movement is called X to A movement. Once we have our X to A movement, we look at the retracement. And the retracement should be at least 61A. Here it is, the line of 61A, if I stretch Fibonacci and measure the XA. If we have a 61A movement, then this point is called B, and the whole movement is called AB movement. Then we measure the AB movement, this way, AB movement. And the retracement of that to AB should be at least 61A, and you see it is at least 61A. The maximum range of that is 886. It shouldn't touch 886, so you see it is between 61A and 886. If this criteria is met, then this point is called C, and the movement correspondingly is called BC movement. So we have AB, which is valid, we have BC, which is valid as well. If these criteria are met, then we need to find the entry, and the entry is 127 and a B extension. You can see it here. I have an extension of 127. Currently it is 1.05298. 0529, 0530 for euro dollar. Usually it is drawn with triangles like this, 1 2 3 and 1 2 3 again, a Gartley pattern. Once you have calculated your entry, you need to stretch your fibs from the point A to the point D, which is completion point. It is called point D, and 382 will be your target. 382 is here. It will be your target. So currently it is 1.0589. The potential gain is somewhere of 60 pips. And the risk, I usually put my risk as the 786 distance of the target. If this is the 100% distance, 60 pips, 100%, so the 786 will look this way. I place 786 here to coincide with my entry, and 0 will be my stop loss. So this is called 786. It will be around 45 pips, I suppose, 45 to 49. 46 pips of risk to potentially generate 60 pips. Well, support level on daily gives us a high probability setup. Price will most likely bounce off support, then to break it through, because we all know that prices are consolidating between those support levels for 70% of the time, and they are breaking those levels, showing us strong directional movement that are called trends only 30% of the time. Price is trending 30% of the time and consolidating for 70% of the time. So we have a 70% probability setup. Also, we have this Gartley pattern setup, Gartley advanced formation setup by itself. If you trade it without a coincidence of the daily, without looking at daily support resistance, if you trade it by itself, it is about 60% correct. Every 6 trades out of 10 will be winners if you trade each and every Gartley you can identify according to these rules, according to advanced formation rules. 60% accurate. But if they are combined, support levels on daily and Gartley patterns, then you have indeed really powerful tool for your trading. And that's not all. Your risk is less than your reward. Even if you have a 50 to 50% accurate strategy, when you have your risk smaller than your reward, you will generate money in the long run. Hope you understand those probabilities of trading. Nothing is guaranteed, everything can happen, but in the long run, if you continue to repeat this, to execute the same strategy again and again and again, if you have an edge, something like that, higher probability of moving to one direction, and your risk to reward ratio is positive, then you will generate money inevitably. Okay, that was the Gartley pattern. Let me show you something very convenient. It's not very convenient to draw Gartleys this way, measuring every leg. So I have created a special script that will draw those Gartleys for you automatically. You only need to show to the script what swings you want to be analyzed. Run the script and you will see the Gartley pattern, those triangles. You will see the entry, exactly 127. You will see the target and stop loss. You will also see your stop loss risk, your target, and you will see some ratios of your pattern legs of the pattern. Okay, another way to do that without drawing is to run my automatical scanning programs. We don't have, if we run this, we don't, and we have a Gartley pattern if we have medium swings analyzer. I have 3 of them: to analyze large swings, to analyze medium swings and swings of the market, and to analyze small swings. So you don't need to always switch the settings between those things. Switch the settings to see if you can find a larger pattern or a smaller pattern. You will have that automatically. Well, that's it for today. Gartley pattern on euro dollar 4 hour at daily support level, high probability setup, money laying on the table, something like that. It is called money laying on the table. Until then, oh, sorry guys, forgive me. If you like this video, please give me your thumbs up, share this video on social media, subscribe to my next videos. Until then, good luck, good trading, hope to see you soon.